So the issue that we run into is what we do is we place the order, and then we want to get filled on the next bar, and if we don't, we want to cancel the order. That's because the system is built to find that pop that gets you to first target. The problem is right now the market's moving so fast that these bars are drawing so quickly that by the time there's two issues really. One is that by the time you've actually placed the order and it's gone, from our computer to the broker's computer to the exchange, back to the broker, back to here, by the time that's happened, it's already time to cancel the order. All right, and so you're not getting it off quickly enough. So even if you would have gotten filled, had you gotten the order in quick enough, you're not getting filled because things are moving too quickly, which makes it hard to look at the chart afterwards and go, okay, yeah, this was a good entry or not. That's problem number one. Problem number two is that look at how crazy the market is here. Like, this is not tradable. You'd be a fool to trade this. If this doesn't settle down, I can't trade this today. The problem number two is that the computer system itself, the resolution of the time, is not enough for the Sierra Chart custom study to figure out which bar the order was placed on. So when we place an order, that's done with a completely different part of the Sierra Chart software. It doesn't say I placed an order on this bar. It says I placed an order at this time, and then it uses by the time the order acceptance comes back, we take that time and we try to figure out what bar did it belong to. And when they're moving this quickly, you can't tell, or you guess. Your multiple bars fit the criteria is the issue, and so you end up immediately canceling that order. So like yesterday, I actually ran this, what you see here on right, in sim, and was up and was flat for the day. Took a bunch of trades. But there's a whole bunch of others that if I was looking at the chart after the fact, were trades that would be taken, but in reality they weren't because the market's moving too quickly. So it makes it very difficult to assess sort of how well is the system doing. So that's the dilemma that we're facing here. It's really not a dilemma. It's that if that's the case, it's too wild for you to be trading. Is the answer. You can't trade this with a 10-tick stop. It's crazy. So this is what we're doing here right now. Is that we're looking at this, and we won't, as it stands now, we wouldn't start till 7 o'clock anyway, 30 minutes after the open. And if this hasn't settled down to the point where it's not moving so wild, you can see just on screen here, you're seeing it make 10, 20, 30 tick jumps inside of a heartbeat. That's not tradable. All right, so if we just review the parameters that we look at, we can predict this by going, all right, the average daily range is above 100 points, which is the red line. All right, so it's way, way above it. It's near insane levels. Let's look back here. In fact, have we exceeded it? Almost. This here was when the wheels fell off the bus, way back here in February. And we peaked and started to settle down, and we peaked again and started to settle down. And the peaks got lower until it got into at least reasonable territory. This is still really volatile, even through here. This is still really volatile. You can go, if we go back a little further in time, you can see more normal is down in you're peaking in the 50 or 60 points per day, and then you're now and again you pop up there, and these days tend to be the ones where you just make just an amazing amount, or you get whacked right away. It's one of the two. The way, given our response to this volatility that we've been experiencing, we're going to have a lot less cases where we get whacked right away now. So we're a lot more choosy, a lot more careful about where and how we enter. The market is so active that the computer response time is actually really slow. In any case, this is an example of just looking at this. You can't trade this. You shouldn't try. All right, so we'll see if this settles down in the next 15 to 20 minutes or so. And if it does, I'll switch this from simulation to live. Otherwise, I'll stand aside. Okay, here we are at the end of the day, and I don't have a whole lot of time. It's already pretty late. ES was up a point, but it took a lot of trades. There's so much movement, as we were just discussing this morning, which will be before this recording. And then the NASDAQ got whacked pretty quickly. But let's look at oil. Oil up 295. That's $2,950. This is SIM, so don't get too excited yet. But that's a very encouraging result. Let's see. Show trade activity log. Where is it? Simulation CLZ8. Period. Today. Yeah, so the last 2 days, basically one trade down. And then, actually that was last week. There was nothing yesterday, right? Yeah, nothing yesterday. Today's Tuesday. And then today, just killing it. So let's take a look at that and see what the system did here. Just trading one contract. So here's the open. And it's interesting because we were talking about it this morning, how that blue arrow is where we would start trading. And you kind of feel like you've already missed it, right? You really needed to be taking a trade back up here where the bars are orange. That's at 4 o'clock in the morning, 4:20 in the morning Pacific time. And then what happens, the market spends some time down here, and enough trading occurs that it brings down the low value area, and now we're inside the volume area. Okay. But the point of control is right here. It's right there. All right, so let me draw the arrow. Right, all there's the point of control. And so in oil, not in oil, but in the volume profile implementation, we've stated that if you're near the point of control, then that's likely a chop zone, stay away. And that's very, very true for the indexes. It's not clear that it's been true for the commodities for oil. This is certainly a case where you look at that and you go, I absolutely want to stay away from that. That's ugly and sideways. And the system, you'll notice there's no orange bars. We're not doing anything to take a trade there because we consider it danger zone. The alternative, something for members to think about, is we could, I've seen cases where it seemed like using the point of control didn't really matter in oil, but I don't have enough data yet to make a decision. If you look at this, the regular chop avoidance would work pretty well here, just given the way that works. So something to think about. The system takes a long there and for a loss, and then catches this beautiful pullback right here. So getting long right there. And then it adds one right there on that break, okay, for 22 and 116 ticks. Actually, we added 2 there. How did that happen? That's -2, right? Interesting. I don't understand that. So this result might be higher than it should be. How did we add 2? Let's check the spreadsheet here. We should. order. Oh, we're okay. So because we started 2 here, this is a mistake on my part. So something interesting about Sierra chart. Let's just do a quick little tutorial. Here's my trade window. Open trade window for chart. All right, where did it go? It's way over here. And it shows, hey, just quantity 1, right? But if you're using the spreadsheet to trade, then what it actually does is trades whatever is listed in the order quantity, which is here, and we control that by this value. And I forgot to update that. So what's actually happening here is I'm placing an order for 2, which is why that loss is more than 100. Because I think I'm trading 1 contract with a 10-tick stop, and I'm not. I'm trading 2 with a 10-tick stop. So this result is with a risk of $200 per trade. So we got to keep that in mind. All right, so we do 2 contracts here, but we don't take anything off because the trade management is thinking that it's one contract. So what ends up happening is when you break there, it resets the target, and then we just get taken out on the trail, which happens to be 116 ticks off of there, plus 22 ticks off of there. So that just crushed it there by itself. Then it gets short here on another just beautiful pullback. So, we break through to the value area high, we thrash around there a bit. That's where we exit. And then as we fall back through it, we pull back and get a signal to short. This is this 228 right here. And we wait until that down bar right there to get in. 1 tick limit entry offset, and then a nice fall. Same thing. It didn't add pretty late here. And then that's the -11, and then you got 2 at +92. So another beautiful, gorgeous run. But then it does it again. Another short right there. And what's happening here is you're approaching that low volume node, so you're getting a signal. You're getting signals because of that. That's why the bars are orange. And 286, I don't remember what it is off the top of my head. But a nice fall. All right, it doesn't add there, and the add is because of this little pullback it sees right there. And when that bar closes down, it adds 1, and then you get taken out there. All right, so that's a nice looking set of trades. Don't know how reliable that is yet. This is I really started oil up again last week. I haven't seen many days where it's moved this well. So there's I think what we're seeing here is that there is at least, if there's movement, there's opportunity. What we've been talking about, or rather, what I did this week that's different from last week is last week's model was built for really volatile conditions because that's how I've been building all the models for the indexes. But oil is not a volatile market now, relatively speaking. It's just I'm laughing at myself saying that compared to days gone by. And so I changed that model to be less strict on the clarity of the signal. And this is a very encouraging result here. Yesterday there was not much movement. We didn't take any trades. Let's see. Let's take a look at yesterday real quick. So yesterday you can kind of see you spent a lot of time just rotating around the point of control. You had some opportunities here and here, but the system didn't find anything, so there were no trades. And I was like, shoot, maybe I'm not. I didn't do much good on the model. I stopped trading at 11:10. The oil cash session or pit, what used to be the pit, closes at 11:30, and so that, generally speaking, it's pretty quiet after that. Here, there was a nice fall. It would have been nice to be part of. Okay, so that's it for today. That's encouraging. For members, I'm close to having the replay program written. For non-members, given what we're doing now, it's so complex, it's so computationally intensive that the Sierra Chart's replay function just takes too long. And I like to do things with a full 3 months of data. So I build a model and then I'll run that model against the next 3 months to get a feel for how well does it work. And I just can't do that now because we've gotten to a point where we're kind of overloading the capabilities of the software when you're trying to run it at 10 times normal speed, 30 times normal speed. And that's just a result of the tracking of the low volume nodes in bar for bar. But I'm close to having what I want, which is a program it exists outside of Sierra Chart that was what I actually originally used way back more than a year ago now, when I was first developing the machine learning models and trying to determine if they were useful or not. I wasn't using Sierra Chart at the time. I was just all doing that programmatically. All right, so I'm close to having that, and then what we'll do, of course, is we'll then use that to get the kind of data-driven decision-making and verification that we're used to, and we can apply that now to some of these other markets. We've been struggling for quite some time now with, I want to go to the daily chart real quick in NASDAQ. This subgraph here with the circles on it is the average daily range. And the volatility has just been so high. This was normal days back here. This was back in December of last year. And since February of this year, the market just went berserk. And we keep waiting for it to settle down, and it kind of just never does. It's gotten down to about 80 ADR, but never below that. And so one of the things I believe that we've got changes and refinements in place, enhancements in place now to actually be able to trade even this stuff here, which is still pretty volatile, but I can't really test it because the replay function is too slow. I've been working on that program to be able to do that. We were relying on the replay function, but we can't now because of the addition of volume profile. All right, that's it for today. Stay safe. I'm standing aside most of the time in the indexes. If you're trading the indexes, do be careful.